Okay, let's unpack this. Today, we're diving into a story that sits right at the intersection of high finance, cutting edge crypto, and, well, incredibly high profile names.
Yeah, it's definitely got people talking.
It's a development that has certainly captured a lot of attention, and for good reason. For those of you tuning in, remember that subscribing, commenting, and engaging with our deep dives really helps support the channel, boosts our visibility in the algorithm, and lets us keep bringing you quality crypto content like this.
We really appreciate it, folks. It makes a difference.
So let's get into it. World Liberty Financial, WLFI.
Exactly. WLFI. What's fascinating here is that we're focusing on this specific project. World Liberty Financial, it's a decentralized finance project. And according to reports, Bloomberg and Fortune, it's backed by the Trump family.
Right, that's the headline grabber.
Absolutely. And they're looking to raise a staggering $1.5 billion. That's billion with a B.
For what exactly?
For a publicly traded Treasury company, it's a significant move, especially given the players involved and just the sheer ambition of that financial goal.
Okay, so our mission for this deep dive, then, is to really extract the most important nuggets from the sources you shared. You mentioned Bloomberg, Fortune, but also Zach Abrams' reporting for The Block, and insights from Arkham data.
Correct. Those are the key sources we're drawing from.
All right, so we'll try to understand what this project actually is, what this massive fundraising goal means, and maybe most importantly, what it could signify for the broader digital asset space. The goal is you walk away with a clear picture of this, well, pretty complex development.
And how traditional influence is really starting to merge with the decentralized world in ways we haven't quite seen before. Not on this scale, anyway.
So let's start right at the beginning. World Liberty Financial, WLFI. As described in these sources, what exactly defines it at its core? What is it?
Well, at its core, WLFI is described pretty clearly as a DeFi project.
DeFi. Okay. Decentralized finance. We talk about it a lot, but maybe a quick refresher.
Sure. When we talk about DeFi, we're really talking about reimagining traditional financial services, things like lending, borrowing, trading, managing assets, but building them directly on, open, transparent blockchain networks.
Cutting out the middleman, essentially.
That's the fundamental idea, to cut out the central intermediaries, like banks or brokers, by using smart contracts, basically code, often governed by community consensus.
Right, so it's peer-to-peer finance.
Exactly. This structure is designed, or at least it aims to offer greater efficiency, more accessibility, and definitely more transparency compared to, the legacy systems.
And WLFI is playing in this space.
Very much so. It's firmly rooted in this blockchain ecosystem, aiming to leverage these decentralized principles in its operations. The key thing to grasp is they're attempting to build a system where financial power is, in theory, distributed, not concentrated.
Okay, so that's the DeFi angle, a clear picture of WLFI on that front. But what truly makes this story leap off the page, and frankly what grabbed my attention immediately, is who's behind it. This isn't just any DeFi project, is it?
Absolutely not. And this is precisely where WLFI diverges, dramatically, from the typical profile of a DeFi venture we might discuss.
How so?
The sources explicitly label it as Trump-backed and Trump-affiliated.
Okay.
And the most striking detail, according to reports in Bloomberg and Fortune, is that former President Donald Trump himself is identified as its co-founder emeritus.
Co-founder emeritus, that's an interesting title.
It is. And the family connection doesn't stop there. His sons, Eric Trump and Donald Trump Jr., are reported by Fortune to be proposed board members for this new publicly traded Treasury company they want to set up.
Wow. Okay, so the whole family is involved at a high level.
Very much so.
Right.
And this level of direct, high-profile family involvement is, to put it mildly, it's highly atypical for a DeFi project.
Yeah, that seems like an understatement. DeFi usually feels more anonymous or tech-focused.
Exactly. Most DeFi initiatives, they were born from an ethos of decentralization, often with anonymous or pseudonymous founders, right? Or from tech-centric teams who deliberately avoid central authority figures or famous names.
There's often that anti-establishment vibe.
Right. Striving for financial systems free from traditional power structures. So this immediate and direct family connection, it instantly propels WLFI into just an unprecedented level of public scrutiny and attention.
It's a huge
A
contrast.
stark contrast, yeah, to the more obscure or technically focused origins of many DeFi projects. The critical insight here, I think, is that this project isn't just bridging traditional finance and crypto. It's forcing a kind of collision between crypto's, let's say, anti-establishment roots and mainstream political power.
That's a fascinating dynamic, an unprecedented test case, as you said.
Definitely. And this unique affiliation, it raises immediate questions like, how does this backing influence perceptions, both in the traditional finance world and within the crypto community itself?
Yeah, does it attract new money or does it scare off the purists?
That's exactly it. Will it attract a completely new type of investor? Maybe people who are politically aligned, or maybe just folks looking for a familiar name in what feels like a volatile market. Could it open crypto to a wider, more mainstream audience?
Or the flip side,
Or conversely, will it generate, significant skepticism from within the crypto space, especially among those who really value anonymity, strict decentralization, and those original anti-establishment principles of blockchain?
it pulls the project in two different directions, potentially.
Potentially, yes. And the sources are very precise in their language, calling it a Trump family-backed DeFi project, World Liberty Financial, and noting President Trump as co-founder emeritus. It underscores how deliberate and public this association is.
So it's not like they're trying to hide it.
Not at all. And remember, this isn't just some small side venture. They have these incredibly ambitious financial targets we mentioned. That makes the affiliation even more noteworthy.
You're not kidding. That figure, they're looking for a colossal $1.5 billion, aren't they? What's that specifically earmarked for?
The ambition is truly on a grand scale. And yeah, the figure itself, $1.5 billion, is just monumental.
How does that stack up in crypto fundraising?
Well, crypto has certainly seen large raises, especially during bull runs, but this figure is still enormous. Even for established projects, it signals a vision for, substantial market presence and significant operational scale right from the get-go.
And the purpose. It's not just general funds.
No, it's very specific. It's intended to set up a publicly traded Treasury company, and that company would specifically hold the project's own tokens, the WLFI tokens.
Okay, hold on. Publicly traded, that sounds very traditional finance.
It is, and that term is incredibly significant here. It implies a deliberate move towards broader accessibility for investors, not just crypto natives, but also traditional investors. And critically, it implies a higher degree of regulatory visibility and compliance.
Right, unlike a lot of private crypto ventures.
Exactly. Many crypto projects remain privately funded, operate with less public transparency. This aims to be much more like a traditional public company, subject to the reporting and oversight that comes with that status.
And are they getting traction with this idea? With investors?
Well, the sources indicate that discussions with these potential investors described as being from the tech and crypto industries are, quote, advancing rapidly.
Rapidly. Okay.
Yeah, although they do add that the structure of the deal is still being finalized. But advancing rapidly suggests a strong appetite and considerable interest from specific sectors for this kind of venture, despite, its unique profile.
So the name recognition, or perhaps the structure, is attracting attention.
It seems so. The speed suggests significant market traction and maybe a belief in the project's potential. A fundraising goal, like $1.5 billion, it just points to very lofty long-term aspirations.
What kind of aspirations? Institutional play? Retail?
That's the big question, isn't it? Is WLFI aiming for deep institutional level integration, positioning itself as a major player that traditional financial institutions can easily interact with and invest in? Or is it gearing up for a massive retail play, trying to onboard a huge number of individual investors through this publicly accessible vehicle?
Maybe both.
Could be. But the fact that discussions are moving quickly indicates considerable momentum. The investor community will definitely be watching closely to see how this colossal sum is actually deployed and what market impact it ultimately achieves.
So this isn't just about raising money, as you said. It's about creating this specific type of entity, this publicly traded treasury company.
Exactly. And that type of entity itself has been gaining significant traction in the digital asset space lately.
Okay, so let's dig into that. They're raising $1.5 billion for a publicly traded treasury company. This whole concept, digital asset treasury company, it seems to be a rapidly emerging trend. What exactly is one of these, and why are we seeing such an explosion of them recently?
You're spot on. It's definitely one of the most significant evolutions in how traditional finance is starting to interface with crypto. The sources actually say the creation of a WLFI treasury company is, quote, unsurprising, given the recent explosion of digital asset treasury companies.
Unsurprising. Okay, so what are they, fundamentally?
Essentially, these companies are corporate entities, often publicly traded, like WLFI plans to be, that strategically acquire, manage, and hold a portfolio of various digital assets.
So like a company's regular treasury, but for crypto.
Exactly. Think of a traditional company's treasury department, but instead of primarily holding cash, bonds, or maybe equities, their focus is squarely on cryptocurrencies and other blockchain-native assets.
What kind of assets?
The sources give examples like Bitcoin and Ethereum, the big ones, but also lesser-known tokens like HYPE and TAO, so it can be quite diverse.
And why the explosion now? What's driving this trend?
It's really multifaceted, and it addresses a crucial market gap, I think. Firstly, they serve as a vital bridge between, traditional corporate finance and the digital asset economy.
Bridge how?
Well, many institutional investors or corporations might be hesitant to directly hold cryptocurrencies themselves.
Why is that? Regulation, custody, complexity.
All of the above. Regulatory uncertainties, the complexities of keeping assets secure, custody solutions, internal compliance hurdles, or maybe just a general lack of familiarity with the tech and how it all works operationally.
Makes sense. It's still pretty new territory for a lot of big firms.
Right. So a publicly traded digital asset treasury company provides a more familiar, structured, and often perceived as more regulated vehicle for these entities to gain exposure to the crypto market.
Ah, so it's like buying a stock that holds crypto instead of buying the crypto directly.
Precisely. It offers a way for corporations to maybe diversify their balance sheets, participate in the potential growth of the digital economy without having to directly navigate all the tricky bits, managing private keys, dealing with decentralized exchanges, handling the volatility of individual tokens.
And for regular investors, too.
Yes, for individual investors, it can offer a way to invest in a basket of digital assets through a traditional stock market listing, a format they're already comfortable with. It basically brings crypto exposure into a traditional, more accessible wrapper.
So it lowers the barrier to entry for traditional capital.
Exactly. It allows capital to flow into the digital asset space from sources that might otherwise just stay on the sidelines. It's really a key mechanism for mainstream adoption.
It certainly sounds like a strategic move, having an entity like this.
It does. And for WLFI, the sources indicate they aren't starting from scratch when it comes to actually holding digital assets, are they? They already have some pretty impressive holdings.
Right, they've been accumulating already, before this big raise.
That's what the reports suggest. World Liberty Financial has already been, quote, accumulating tokens from other crypto projects to form its own digital asset treasury, even before proposing this $1.5 billion raise.
So this isn't just a plan, it's an ongoing strategy.
Exactly. It demonstrates, I think, a sophisticated understanding of the digital asset market. And Arkham data, which the sources cite, provides some specific and frankly quite impressive figures on their current holdings. It shows a diversified and pretty substantial portfolio already exists.
Okay, like what? What are they holding?
For example, they hold nearly $55 million worth of Ethereum. $55 million.
Wow, okay. Just holding it.
Not just holding it. What's particularly compelling here is that some of it is reported to be staked.
Staked Ethereum, meaning?
Staking, in the context of Ethereum, involves locking up your ETH tokens to help support the network's operations, basically acting as a validator, helping secure the blockchain, process transactions.
And you get rewarded for that, right?
Exactly. In return, the staker earns rewards, kind of like earning interest. So this is a critical strategic move. A portion of their Ethereum holdings isn't just sitting there passively. It's actively generating income for the Treasury.
So the Treasury isn't just storage, it's potentially generative.
Precisely. It transforms a passive asset into a generative one within the DeFi ecosystem. It showcases a pretty sophisticated approach to capital efficiency, yield optimization. It suggests they're not just speculating, but actively participating in the decentralized economy to optimize returns.
That's a key detail. What else is in there?
Beyond Ethereum, their treasury also includes $19 million worth of wrapped Bitcoin tokens.
Wrapped Bitcoin, WBTC. So Bitcoin on the Ethereum network.
Exactly. Wrapped Bitcoin, or WBTC, is basically an ERC20 token that represents Bitcoin on the Ethereum blockchain. This lets you use Bitcoin's value within Ethereum's DeFi ecosystem for lending, borrowing, yield farming, all that stuff.
Shows they understand interoperability.
It does. And how to leverage the liquidity of the biggest crypto within other blockchain networks.
Yeah.
They also hold nearly $14 million worth of Tron, another major blockchain platform.
Yeah.
And millions of dollars more worth of EOS, Mantle, Ondo, and more. So quite a few others as well.
That's a pretty diverse mix. Big caps and some smaller ones.
Yeah, the inclusion of these major assets like ETH and BTC, alongside smaller, perhaps more niche tokens like Mantle or Ondo,
Yeah.
it demonstrates a broad and potentially active investment strategy.
It's just they're doing some digging, not just buying the top two.
Right. It suggests they're not merely buying and holding the obvious big players, but maybe also conducting due diligence on promising smaller projects, possibly seeking higher growth, or just actively managing a diversified digital asset base.
So this existing diversified portfolio is pretty solid evidence of a proactive strategy before this massive new raise.
I'd say so. It indicates a sophisticated approach to the digital asset market.
Mm-hmm.
And this impressive existing treasury, it really sets the stage for what this new publicly traded treasury company will specifically hold, which is their own tokens, the WLFI tokens.
Ah, right. That brings us to the tokens themselves.
Exactly, which raises the question about their current status and what's next for them.
So they've already got these significant holdings in other cryptos, and now they're looking to establish a new publicly traded treasury specifically for their own WLFI tokens. That's a massive shift. But before we get to the new treasury, what's the current status of these WLFI tokens themselves? Are they actually trading out there in the wild yet? Can you or I buy them?
That's a crucial question because, yeah, it defines their current market accessibility and their future path. As of now, the project's WLFI tokens are, quote, not currently tradable by investors.
Not tradable. Okay, so who holds them then?
It means that likely only early investors, maybe the project's developers or specific participants in its initial phases, currently hold these tokens. It severely limits their market exposure to the broader public and institutional investors.
So you won't find them on Binance or Coinbase today?
Nope, not listed on major crypto exchanges for direct purchase at the moment. However, and this is key, this is set to change very soon. It marks a really pivotal transition for the project.
How so? What's changing?
The sources explicitly state that the WLFI tokens will be unlocked for trading in the future following last month's near-unanimous vote by token holders.
A vote by the token holders.
Yes, and they add that the tokens will become tradable on exchanges soon. The near-unanimous vote in July is mentioned as a concrete date marker.
Okay, so the community decided this. That's interesting, that decentralized aspect.
It is. It highlights that key aspect of DeFi community governance. This vote by existing token holders signifies a collective decision to move the project into a more public liquid phase, making the token accessible to a much broader investor base. It underscores a commitment to that decentralized ideal, at least in this operational aspect.
And the implications of them becoming tradable.
Well, profound. Once available on exchanges, the WLFI token will immediately be subject to, the dynamic forces of market supply and demand. That's what will determine its price.
And soon, in crypto could mean anything.
Yes. Could be weeks, could be a few months. But it unequivocally signals the team is actively preparing for this critical step. The initial performance of a newly tradable token, especially one with this kind of high-profile backing, well, it'll be influenced by a ton of factors.
Like what?
Overall crypto market sentiment, obviously. The project's perceived utility and adoption, the level of investor interest, both from the traditional world and the crypto natives, even broader macroeconomic conditions.
So it's a major high-stakes step, moving from private to public, essentially.
Exactly, from a non-tradable, privately held asset to a publicly traded liquid one. It's a huge step in WLFI's journey towards wider adoption and market recognition.
Okay, so not tradable yet, but soon, and that's after this near-unanimous community vote. But you mentioned the supply. The sources say 100 billion total supply of WLFI tokens. That sounds astronomical.
It is. 100 billion is a truly massive potential circulation.
So when they become tradable, will all 100 billion of them just be unleashed onto the market at once? Because that sounds like it could cause chaos.
That's an excellent and very important question given that staggering number. And you're right, releasing such an enormous supply all at once could indeed create immense selling pressure, severe price volatility, potentially tanking the token before it even gets established.
So they have a plan for that?
Fortunately, yes.
Yeah.
The sources indicate a more controlled and deliberate approach, which is, common practice in well-structured DeFi projects aiming for long-term sustainability.
What's the plan?
Initially, quote, only tokens sold to early backers will be unlocked.
Ah, okay. A phased release.
Exactly. It's a strategic move, directly addressing that concern of overwhelming the market. By limiting the initial unlock to only those who invested early, the project aims to manage the circulating supply, control potential inflation, and prevent a sudden, overwhelming flood of tokens onto exchanges.
Smart. Stabilize things early on.
Right. Helps stabilize the price in the early stages of public trading, allows for more gradual market absorption. It's about ensuring a smoother entry into a highly volatile market.
And what about the other 99 point something billion tokens?
That's the other crucial part. The sources state that the release schedule of the remaining WLFI tokens from its 100 billion total supply is to be decided by a second community vote.
Another vote. So the community decides the long-term inflation rate, essentially.
Pretty much. It's not a top-down centralized decision from the team or the backers. It's meant to be determined by the collective will of the token holders themselves.
That really leans into the decentralized governance idea again.
It does. This reliance on a second community vote underscores a significant commitment, on paper at least, to decentralized governance for key economic decisions. It means the long-term supply dynamics, the pace at which the vast majority of tokens enters circulation, will be directly influenced by the community.
Gives token holders real power.
A powerful voice in the project's economic future, yeah.
This democratic approach is a core tenet of many DeFi projects: collective ownership, decision-making on fundamental stuff like tokenomics.
So the implications. Controlled release means building long-term value, not a quick pump.
That's the suggestion, a deliberate strategy. By staggering the supply, the project can adapt to market conditions, respond to demand, ensure new tokens are introduced in a way that supports sustainable growth, hopefully price stability.
But it does raise that interesting tension you mentioned earlier.
Exactly. How does this concept of a community vote and decentralized governance align with, or maybe contrast with, the project's very high-profile centralized affiliations, particularly with the Trump family members potentially on the board of the Treasury company? Yeah, it's a fascinating juxtaposition. Traditional influence meets decentralized control.
Within a single venture. It'll be fascinating to watch how that plays out.
Definitely one to keep an eye on. And speaking of their ecosystem, they also have a stablecoin, right? The USD1, and plans to engage its users. That's another interesting layer to their strategy.
Precisely. The WLFI project doesn't exist in a vacuum. The sources say it offers alongside its USD1 stablecoin.
USD1? So pegged to the US dollar, presumably.
That's the implication, yes.
Mm-hmm.
Stablecoins, as you know, are just a vital foundational component within the broader crypto ecosystem.
Yeah, they provide stability amidst all the volatility.
Exactly. Unlike Bitcoin or Ethereum, stablecoins are designed to maintain a stable value. Makes them incredibly useful as a medium of exchange within crypto, for holding value without constant exposure to price swings. They're crucial for trading, lending protocols, payments, even just as a safe haven during market downturns.
So WLFI having its own is significant.
It is. But what's particularly noteworthy about their approach with USD1 is their proactive plan to actively engage its user base.
How are they doing that?
The sources report that they are planning to distribute points to users of its USD1 stablecoin.
Random, like loyalty points?
Sorta, yeah. This strategy of distributing points is a very common and often highly effective Web3 growth tactic. It's designed to incentivize usage, reward loyalty, and foster a vibrant user community around their pegged asset, USD1.
And what do these points get you?
Well, these points often serve as a precursor to future benefits. Things like potential token airdrops, where new tokens, maybe even WLFI or another related token, are distributed to existing users for free. Or it could be exclusive access to new features, maybe governance rights down the line, or other advantages within the ecosystem.
Ah, so it's like a loyalty program, but with potential crypto upside.
You got it. Think of it that way. The goal here is clearly to encourage people to actually use and hold USD1, thereby building a robust and active user base.
Makes sense. Get people invested in the ecosystem through the stablecoin.
Right. By rewarding users for their engagement, WLFI is aiming to cultivate a strong community that is actively invested in the project's success and utility. This approach suggests a focus on growing their user base, fostering active participation. They recognize that a thriving, engaged community is often key to the long-term success of a decentralized project.
So it's a clever way to onboard users and create that sense of ownership, linking the stable asset to future value and project growth.
Exactly.
Okay, so we've covered a lot of ground. We've got the tech, the DeFi aspect, the blockchain, we've got the finance, the huge raise, the treasury company structure, the existing holdings, we've got the tokens, WLFI, USD1, the release schedule, the community governance, and the user engagement strategies. It's a pretty comprehensive picture of the project itself.
It seems to be a well-thought-out structure, on paper.
But we can't ignore the elephant in the room. This project carries a name that brings with it a unique set of circumstances, especially given the involvement of former President Trump. So, what does this all mean for its reception? In the market, in the community, maybe even with regulators?
This is absolutely where the narrative shifts significantly. It moves beyond just financial and technological considerations to include this profound political dimension. And that adds layers of complexity and, frankly, scrutiny.
How so?
Well, the sources explicitly state that President Trump's involvement, specifically as its co-founder emeritus, has, quote, raised conflict of interest complaints from critics.
Okay. Conflict of interest complaints.
Yes. And it's crucial here, for us to report on this impartially. We're just stating that these complaints exist as part of the public discourse surrounding the project, based on the sources, without us endorsing or refuting their validity.
Understood. So, what's the nature of these complaints?
The unique challenge really stems from the intertwining of these high-profile political figures with a financial venture, especially one seeking to raise so much capital and operate as a publicly traded entity. The complaints, as reported by outlets like Bloomberg and Fortune, often seem to center on the potential for perceived undue influence,
Influence on what?
particularly if the project were to interact with government entities, for example, or if future regulatory frameworks impacting crypto were to be shaped while a major political figure remains affiliated with such a prominent project. Fortune specifically cited concerns about the optics, of leveraging a prominent political brand for financial gain in a sector that historically had this anti-establishment streak.
Right. The optics are definitely unusual for crypto.
And critics might argue this could create a sort of political premium, or maybe a political discount for investors, where the token's value is influenced more by political alignment or opposition than by its actual underlying tech or utility.
That's a level of scrutiny most DeFi projects never have to deal with.
Virtually unheard of. As we discussed, many DeFi projects prioritize decentralization and lack of central figures precisely to avoid these kinds of entanglements.
So, how might this political connection impact the project moving forward?
Well, several ways, potentially. Firstly, regulatory scrutiny might be significantly heightened. Financial ventures involving prominent political figures often attract closer examination from regulatory bodies, just to ensure compliance and prevent any perceived impropriety.
Makes sense. Regulators would likely take a close look.
Secondly, public perception will undoubtedly be highly polarized. We touched on this. For some, the Trump family's involvement might indeed legitimize crypto, attract a new, perhaps politically aligned audience who might have been hesitant before.
A mass adoption angle.
Possibly. It could be seen as a pathway, bringing mainstream attention and capital from a demographic maybe previously untapped by crypto.
But the other side.
But for others, particularly those who value that anti-establishment ethos of crypto, or maybe those who are politically opposed, this affiliation could add a significant layer of political risk and controversy that other projects just don't have. It could deter certain segments of the crypto community, maybe lead to accusations of politicizing a technology that many see as inherently neutral or universal.
So it really forces a choice for potential users or investors in a way most crypto projects don't.
It does. It presents this fascinating real-time case study in how a project's reception and ultimate success can be profoundly shaped by factors far beyond its technical merits or its financial structure. It's a real collision of worlds.
This truly raises an important question then. What does this specific deep dive reveal about that intersection? The intersection of traditional finance, emerging crypto technologies, and now political influence. So, if we connect this to the bigger picture, what does this entire development, the massive raise, the unique structure, the high-profile affiliation, what does it all mean for the broader DeFi and crypto landscape?
Yeah, I think this is truly a pivotal case study for the evolving landscape of decentralized finance and maybe for the entire digital asset space. What we've seen with World Liberty Financial is this potent combination, this synthesis of several powerful trends happening at once.
Like what? Sum it up.
You've got the massive $1.5 billion capital raise goal. You have the innovative structure of a publicly traded digital asset treasury company. You have the impending market entry of its WLFI tokens, governed supposedly by community votes on release schedules. And then, perhaps most uniquely, you have this prominent political affiliation of the Trump family.
So connecting that to the bigger picture,
What?
what's the takeaway?
Well, this project really exemplifies how powerful figures from outside the traditional tech and crypto realms are increasingly engaging with this space. And this engagement isn't just, celebrity endorsements or passive investments anymore.
It's direct involvement, building things.
Exactly. Direct involvement in the creation and potentially the governance of new financial entities within the digital asset ecosystem. This could potentially bring unprecedented new capital and new audiences into crypto. It might legitimize it for a segment of the population that maybe viewed it with skepticism or just wasn't interested before.
The potential upside for the industry,
Mhm.
faster adoption, more money.
Could be. An acceleration of mainstream adoption, a significant influx of resources, potentially pulling in investment from demographics previously untouched by the decentralized world. That's the potential positive spin.
But there are always downsides or challenges.
Absolutely. It also brings with it new challenges, new complexities. It immediately heightens the stakes for public perception and regulatory oversight. How will regulators who are already struggling with how to classify and oversee crypto respond to a venture with such overt political ties?
Will it trigger more scrutiny, harsher rules?
It's possible. Will lead to increased scrutiny, calls for more stringent regulations, or maybe even a politicization of the regulatory process itself. We don't know. But this project fundamentally tests the boundaries of DeFi's core ethos versus the realities of mainstream adoption.
That core ethos being decentralization, freedom from traditional power.
Right. DeFi was often born from that desire for financial freedom, decentralization, a move away from traditional centralized authorities. Yet, here we have a project that is, on one hand, leveraging decentralized tech and community governance, but on the other hand, is deeply intertwined with a very centralized traditional power structure.
So the big question this deep dive reveals is, which way is crypto heading?
That's kind of it. Is this a natural, maybe inevitable journey of crypto into the mainstream, where it will eventually intersect with all facets of traditional power and finance? Or does it pose a fundamental challenge to those anti-establishment roots that many in the crypto community still hold dear?
We don't have the answer yet.
Not at all. But the success or challenges faced by WLFI will undoubtedly provide critical insights. Insights into how the digital asset market adapts to, or maybe pushes back against, such high-profile traditional influences, and what that means for its future trajectory and its integration into the global financial system.
It's a fascinating experiment unfolding in real time.
Definitely. One that could redefine what decentralized finance truly means in the years to come.
Okay, so let's quickly recap what we've unpacked in this deep dive. It's been a lot.
It has. So we've seen how World Liberty Financial, this Trump-affiliated DeFi project, is seeking that massive $1.5 billion for a publicly traded Treasury company.
A company set up to hold its own WLFI tokens.
Exactly. And those WLFI tokens are themselves on the cusp of becoming tradable, following a near-unanimous community vote that also set up a phased release schedule, with future releases also subject to votes.
And the project isn't starting from zero. It already has significant existing digital asset holdings.
Right, including actively staked Ethereum, wrapped Bitcoin, Tron, and others. And it plans to engage users through its USD1 stablecoin using a points distribution system.
And all of this is unfolding amidst that backdrop of public scrutiny regarding its high-profile affiliations.
Yeah, affiliations which have drawn those conflict of interest complaints from critics, according to the sources, and really forced this kind of collision between traditional power and decentralized ideals. It's a really complex tapestry of finance, technology, and political influence.
It truly is a dizzying amount to unpack, but what this deep dive underscores for me is that we're not just observing the evolution of digital assets anymore. We're witnessing this almost seismic collision between established power and the decentralized frontier. It feels like it's forging a new, pretty unpredictable era.
Indeed. And that raises, I think, a really important question to leave folks with. What might the success, or perhaps the challenges, of a project exactly like WLFI signify for the future trajectory of DeFi? Especially as it intersects more and more with prominent public figures in traditional finance, moving from the fringes towards potentially much more mainstream attention.
Yeah, how will the market and regulators react to these kinds of ventures going forward?
Exactly. And what does it ultimately mean for the very definition of decentralized finance when it steps fully into the glare of the global spotlight, carrying all that traditional baggage with it?